to us about the biggest opportunities in ESG for 2021.
Well, obviously, as you mentioned, I think green bonds are increasingly popular, and it's a very interesting space to watch. Though for Irish Group, for ourselves, we don't have a big focus on green bonds because a few years ago when we did look at it, we did think about whether the use of proceeds are appropriately ring-fenced. But having said that, I think it's really taken off over the last few years, and especially in the sustainability-linked bonds, some recent issuance in Europe that we've seen in pulp and paper, as well as in the food sector, has been really quite interesting, where they actually link the coupons to the actual impact from the use of the proceeds. And I think for family offices and private investors like ourselves, access is really an issue. So we tend to look more at the bond funds, green bond funds. And for us, we really want to home in on Asia. But there hasn't really been that many of these Asian green bond funds, but that's definitely an area that we want to look at more closely going forward.
Ronie, what do you make of the pace that we've seen in the ESG market? I mean, you know, even in the equity markets, even among techs, we're talking about frothy valuations. Could the same be said about ESG?
Yes, definitely. I think ESG is really taking off in the last few years. As we always say, we think more has happened in the last few years than previous many years combined. And for us, in Hong Kong specifically, where our family office is based, we've seen such a significant increase in the demand from our peers, which is other family offices, private investors, in recent years, not just in the awareness and interest, but in the action that's been taken. We actually incubated a sustainable finance initiative platform back in 2018 to try to grow this private investor community here. And we're very pleased to say that we've seen this significant growth from when we first started as 12 years ago, a couple of families here, to now 25 to active private investors within our community. And from the survey that we've done, they have really shared with us that they actually intend to increase their sustainable investment allocation to more than 50% over the next 3 to 5 years, and that more than 60% of these investors have also shared with us that they are prepared to invest up to $5 million per transaction, per ticket size, in these sustainable investments as well.
We know that Xi Jinping has committed to be carbon-free by 2060, and that's sure to supercharge China's green industry. How do you play that? How do you position for those opportunities?
Well, we've always been very supportive and excited about these kind of development from the policy high level, especially from the Hong Kong, and more recently, as you mentioned, from China's commitment to net zero by 2060, and then Hong Kong following to be carbon neutral by 2050. And we think that Hong Kong is very uniquely positioned to take a lead rather than to just merely follow or to play catch up. And so much has been happening in this regulatory space in Hong Kong that we're so excited about, whether we're talking about the stock exchange, going from ESG disclosure, from voluntary to comply to explain, to now mandatory for environmental disclosures, to the SFC requiring climate risk disclosures for fund managers. So as a family office, we try to be supportive by basically making a submission to every single of these consultations that comes out from the regulators, and getting another 15 or 20 or even 30 signatures to sign on and to represent that private investor voice here in Hong Kong, and to give feedback and support to our regulators and policy to keep up this momentum so that Hong Kong can take that lead.
Ronie, I think you were saying at the moment that regulators here in Hong Kong have done more in the last 2 years in this field than they have done in the last 10 put together. So, I mean, out of the E, the S and the G, where do they need to work on the most? Certainly, we did have a former chairman of the stock exchange on a few weeks ago suggesting that certainly when it comes to governance, the G bit, they're really lagging in terms of female participation.
Yes, thank you for asking that, because in many of the submissions that we've given to the government, we think that there's a lot of focus on the environment, so on the E aspect of ESG, And on the governance aspect, I think for Hong Kong, it's always been quite strong. But where we always try to push for more is on the social, so on the S part. And because for us, we really think that social and environment and governance, they're all intrinsically linked. So it really, at the end of the day, I think it's really important to not overemphasize on certain environment governance and forget about the social. And I think as part of this recent push on climate risk disclosure, climate risk and opportunities for banks and financial institutions, I mean, we deeply welcome that. And for our group, we ourselves have a very strong climate lens. But again, we also see the social element is intrinsically linked to the environmental aspect, and we would want and look forward to seeing more of that aspects being developed, whether it's in terms of disclosure or in terms of analysis and stress testing going forward.
Well, tell me, I mean, it's all very well to have these disclosures, but you know, the disclosures are meant, I suppose, ultimately for these companies themselves to start addressing what they are disclosing, are they?
I think in terms of the initial years of disclosure, so when the stock exchange went from voluntary to comply explain, I think that was back in 2015. At the beginning, we did see that a lot of the larger companies were the first companies to really take on that, but it was largely a tick boxing kind of approach. So to your point about whether they are really doing it, so that was when we really made the submission again to feedback that we wanted to see a more strategic interpretation of this disclosure rather than just merely giving some simple statistics or KPI as measurements. And in that regard, I think the stock exchange has actually done quite well because in recent years, they actually included the board to make the board accountable for these ESG disclosures and to ensure that there's a more strategic management analysis of these disclosures so as to improve the quality and align that more with international standards.
I just want to also get into, you know, where the investment opportunities are. I think you're also looking at something called Blue Finance. It's a sort of blended finance program. Tell us a little bit about it and the opportunities that you're finding.
Sure. So Blue Finance is a social enterprise that focuses on marine protected areas in Southeast Asia and the Caribbean. We gave them a proof of concept grant. This was in first half of last year. This was actually as part of a bigger blended finance facility that we set up back in 2019. It's a $3 million blended finance facility that gives feasibility and proof of concept type of grants to nature-based investment solutions in Asia. And in Blue Finance's case, this was actually the first grant that we gave out as part of this facility, and it was hugely catalytic. And for two reasons. The first one is that from a financial leverage point of view, our grant was a mere $385,000 grant, but that allowed them to then target up to 50 million in blended finance funds. And out of that includes commercial capital that would otherwise just simply would not have gone into those kind of projects in those regions. And then the second reason why it's catalytic is from an impact perspective. So if it really does succeed in protecting up to the 20 marine protected areas across Southeast Asia that it targets, then we're talking about over 8 million hectares of marine reef ecosystems. And that's equivalent to the size of the Czech Republic. And also provide economic benefits and food security for more than 1 million of this population living in these coastal areas.